Bismillah ar-Rahman ar-Rahim. Assalamu alaikum students. In the last lecture, we have completed the topic of correction of error related to trial balance, and we have discussed some error which affect the trial balance, and we have read the 6 types of error which doesn't affect the impact on the trial balance. Okay, so these are the questions which you have to solve by yourself. Self-test question, you have to solve all these 12 questions. So if you face any problem in this question, you can ask, then I will provide you a solution. Okay. So in this class, we will start a new topic that is the bank reconciliation statement. Bank reconciliation statement. So, what is the purpose of bank reconciliation statement? So, the purpose of bank reconciliation statement is to reconcile the difference between the cash book balance. Cash book balance, you can see this. It's a bank record. It's a business record of their bank account, and the bank statement balance, and the bank statement balance mean the bank's record of the bank account of that particular business. So in BRS we will reconcile two mains account. Number one is business cash book, and the second one is business bank account. So we will reconcile the two accounts. Okay, so the reconciliation of you can say this, the cash book and the business bank account should be reconciled. So if not reconcile happen, so we will see the difference where difference occur. Either the difference occur in the cash book, or difference occur in the business bank account. Okay, so in BRS, so we have normally two types of account we will discuss in this BRS statement. So in BRS bank reconciliation statement, we will deal on two types of account. Two types of account we will deal in BRS. So the first one is, you can say, the cash book or bank book. Cash book, the other name of cash book is bank book. So the first account related to cash book or bank book, and the second one is the bank statement and passbook. Bank statement, the other name of bank statement is passbook. Passbook. So the entire story of BRS will circulate in these two accounts. So what is the cash book or bank book? The cash book provide us with the balance we have in our bank account, and for each bank account separate record is maintained. So a business also maintain a cash book for its own record, and business having a bank account, and the business bank will maintain a bank statement for that particular business. So what is the cash book? I have told you the cash book is the account which business is maintaining for itself. So you can say this, this book is maintained by the business, by the business for its own record. for its own record. And what is the bank statement and passbook? The bank statement or passbook is maintained by a business bank. It is maintained. It is maintained by the business bank. So the business bank will maintain the bank statement. It is maintained by the business bank. For example, ABC Bank Limited, etc. For example, okay. So now further talk about the cash book. So what information we will record in our cash book? So the cash book has by default the cash book has by default as a normal or favorable balance, that is the debit balance. That is the debit balance. So the balance as per cash book is also, we have two type of balances here. Balance as per cash book, balance as per cash book. If we have uh, a debit balance, the debit balance is considered to be a normal or favorable balance. Debit balance is considered to be a debit balance is considered to be a normal or favorable balance, or favorable. And if we have a credit balance, credit balance, so it's overdraft or unfavorable balance. It's overdrawn, or you can say overdraft, or you can say unfavorable balance. Unfavorable. So in cash book, which a business is maintaining for itself, the normal balance is the debit balance. So by default, the cash book balance will be the debit balance. So if question is silent, we have a debit balance in our cash book. Now we will talk about the balance as per the bank statement or passbook. So balance as per cash book, that is the passbook. Balance as per bank statement. Guys, are you listening? Okay, the balance as per bank statement will be the, so if we have a credit balance, if we have a credit balance, credit balance, if we have a credit balance, it is considered to be a normal balance as per bank statement. Why it's considered to be a normal, I will tell you later. So it's a normal, or you can say this the favorable balance. So it's a normal or favorable balance. And if we have a debit balance, if we have a debit balance in our bank statement, it's mean we have a abnormal balance or overdraft balance, overdrawn overdrawn, or you can say overdraft, it's the same. And unfavorable balance, unfavorable balance. So this is the little story related to cash book and bank statement. Now I will tell you how these two accounts work. Okay, so the bank account or cash book which a business is maintaining, for example. So this is our cash book. This is our cash book, also called bank book. So it's our debit side. It's a ledger of cash book or bank book. It's a credit side. Now here we will record some fictitious values. So for example, the cash receipt will be written here. All cash receipts will be written on debit side. On debit side. So and all cash payment will be written. All cash payment only. All cash payment will be written on the credit side. For example, we received a cash from debtor A. Debtor A, we receive a cash from debtor A, and we receive a cash from our debtor, that is the trade receivable. From B, we received interest income. We received interest income. So, for example, I assume some hypothetical values, and we have a, balance BD. We have a balance BD. So, balance BD is the opening balance. So, for example, we have opening balance of 10,000. We receive a debtor 5,000, and here is a 3,000. Here is a 2,000, and we give payment. We gave payment to creditor. So here is a some adjustment related in cash book. So these are all fictitious. I am assuming the values just to understand the account, how accounts is working. So we have a creditor. Creditor mean trade payable. So debtor and trade payable, we gave payment to we made payment to creditor. You can see the creditor M, or you can say creditor A, and we gave payment to for interest expense. Interest expense. For example, here is a 5,000, and here is a 2,000. So what balance we have left in our cash book account? So balance left, that is the balance CD. So if we add up all the debit side, the total will be the what's the total will be the, please can you count for me? What is it? What is the total of debit? Yes, 20,000. Well done, 20,000. And if we subtract 7,000 from 20,000, what's the balance amount will we have? Yes, 13,000. So it's mean we have 13,000 in our cash book. So these are all cash receipt, and these are all cash payment. If we subtract payment from the receipt, the 13,000 remaining balance of cash we have in our account. Okay, so this is the total of debit and credit. So this is the cash book, which actually who is maintaining this cash book account? Who is maintaining this? Yes, tell me. Yes, a business itself. You can say a business accountant is preparing this account. Okay, under the supervision of a business owner. Okay, now we will move to the business bank account. So uh, in these time, business most of the business is working with bank, and most of the payment and cash received through the bank. So business also has a bank account. So there is also some movement will be going on through our banking. Okay, so now we move towards our banks. So for example, I will show the running account format for the business. Okay, so the bank is maintaining a running balance account. So this is the bank. Uh, we can say Dubai Islamic Bank. You can say this. So for example, a business, here is the business. You can say this a cash book which is maintained by the business. So for example, this is the business. ABC Limited is the business. Here is the business, and here is the business bank account. So here is the business bank account. So you can say how make a design of bank. I don't know. Oh, it's very weird looking. It's not nice. So assume this is the business bank account. So the business bank name is Dubai Islamic Bank. Dubai Islamic Bank. Okay, for example, so a business has a bank account in the Dubai Islamic Bank. So Dubai Islamic Bank is maintaining the bank statement, is preparing the passbook. So the Dubai Islamic Bank is maintaining the running branch. Dubai Islamic Bank maintains a running balance account. So we assume that uh, dubai islamic bank Dubai Islamic Bank maintains a running balance account. A running balance account. So a running balance account is not look like a T account, but is we are recording day-to-day transaction with the sequence. So here is some little format related to a running account balance. That is the so here is the format that we will write our description here. Description here. Here is the withdrawal. Withdrawal mean debit, and here is the cash deposit, and deposit mean credit, and here is the balance. Here is the balance. Okay, so Dubai Islamic Bank is maintaining a running account balance. Here is description. For example, opening balance in the bank is that is the 20,000. So credit, it's mean. So the bank statement and cash books are to be written opposite direction. So in cash book, which we have debit, in bank book, that will be the credit. So we have our opening balance in our cash book is 10,000. So it's mean it should be the 10 or 20. So here is the 10,000 we have opening balance. So it's mean in our bank account we have a 10,000. So we will record that in our cash book 10,000. So this 10,000 mean that in our bank account we have 10,000. Okay, understand? So just to keeping a record that we have what's happening, what's going on with our business bank account. So what actually is going with our bank account, we will record it on our cash book. And what actually we will record in our cash book, we will also record in our bank account. But in bank account, the bank employee, the bank worker will record on our behalf. Okay, so every movement in these two accounts will also be matched just like this. So in our cash book we have 10,000. So in our bank account we have must also have the 10,000. So this 10,000 must match with this 10,000. So in cash book there is a debit, but in our bank account it will be credit. Why it's credit? Can you tell me why it's credit? This is just you can say a answer, but this is not the logical reason. I ask you a question. If we have debit in our cash book, why we credit here? Uh-huh. In bank account, credit balance is favorable. As you see this in bank account, credit balance is favorable. But the reason is why we credit in bank statement, because the bank is different from business. The bank is different from business. It's mean this 10,000s belong to business. It's mean it's a bank liability. That bank has to pay back this 10,000 to what's the business name is to ABC Limited. Okay, so that's why the bank is maintaining this account, na? DIB, Dubai Islamic Bank, Dubai Islamic Bank is preparing this account on behalf of ABC Limited. So it's mean 10,000 is a liability of DIB. The DIB has to pay this 10,000 to ABC Limited. So that's why it's a liability. That's why DIB credit the 10,000. Now you got it. That's the reason the bank and the cash will move up in opposite direction. What we have debit, the same amount will be credit in the bank statement. What we credit here, we will debit here. What we credit in the cash book, we will debit in the bank statement or a passbook. Got my point? So this is this reasonable little logic behind this. So this is very easy concept to understand. Okay, just yes. Can you repeat? Okay. Okay. So okay, I will write it. So why this is credit? Why credit? Because DIB, DIB you can say bank, Dubai Islamic Bank, DIB Dubai Islamic is a bank. A bank is maintaining the account. Bank is maintaining the account on behalf of customer, on behalf of customer. In our case, the customer is ABC Limited. So it's a bank liability that it has to pay back 10,000 to A, B, C Limited. So due to the liability, bank credit the 10,000. Got it? Okay. Or you can say I will pass a entry for you, but it's not required here. So if we bank receive 10,000, so the bank debit by 10,000 and ABC Limited credit by 10,000. So ABC Limited is a creditor in somehow, not creditor, you can say payable. ABC Limited is a payable for DIB. Okay, so DIB feel liable because he has to pay back 10,000 to ABC Limited. Okay, now you clear it. Have you clear? Mhm. Yes. So bank is payable. So that's why bank credit 10,000 because bank is feel liable. So this is the entry of DIB. So this is entry of DIB. So here is the DIB. DIB received 10,000. So DIB bank will increase by 10,000 and BIB, yes, so that, so it will be credit. Okay. Okay. So it's a little concept that will make you a better understanding for the concepts. So now move ahead. So now you support me, okay, to record all the transactions. Okay, so debtor A we will debit. So what will happen in the passbook? We will write on debit side or credit side. So I want to write this one 5,000 debtor A. So debtor A should be written on withdrawal side or deposit side. Can you tell me? Well done, because every debit items, or we can say this, you can say every debit amount will be written on the credit side of bank account. So this is the main rule. You can posting blindly without seeing any bothering any concept. Okay, just like this. Check my speed. So here is a debit balance. So balance is here. Now debit debtor a 5,000, 3,000, 20,000. So I blindly write here 5,000, then 3,000. So I am not bothering about the concept. I know that the debit will return on the credit of the bank account. So here is the debtor A, debtor A. Then you can say this debtor B, debtor B. Uh, then it will be interest income. Okay. So now every credit transaction will be recorded on the debit of the bank account. So we will write 5,000 and the 2,000. Okay, so we will write the 5,000 and 2,000 here. So here is the, you can see the 5,000 and 2,000. Okay, and the reference is creditor A, and the interest expense, that is it 2,000. Okay, so if we balance and find the closing account, find the closing balance. So what will be the closing balance of the cash book? That is 13,000. So we will also calculate closing balance as per business bank. So the closing balance will be the 10,000. So the credit mean deposit. What does deposit mean? Increase our bank or decrease our bank? Deposit mean if we deposit 5,000 in our bank, for example, ABC Limited deposit 5,000 in Dubai Islamic Bank. So their account, its account will increase or decrease? Please tell me. Its account will increase. Increase. Because we have a 10,000 in balance, we deposit 5,000 more, then the total will be the 5,000. So 3,000 deposit more, the total will be the 18,000 credit. Now 2,000 deposit more, the total will be the 20,000. So this is also called running account balance, because we will balance out by day-to-day transaction. 20,000. So we have a 20,000. So we have make withdrawal. Withdrawal mean our bank is decreasing. Withdrawal mean bank is decreasing. Bank is decreasing. Deposit mean bank is increasing. Bank mean bank account. Deposit mean bank account increasing, and the withdrawal mean bank account is decreasing. Okay. So just this is just a little hint. So 20,000 and withdraw 5,000 from bank. So the bank balance will be the 15,000 credit, and we will make payment of 2,000. 15,000 minus 2,000. The answer will be the, please uh, what will be the balance? Yes, the balance will be the 13,000. So the balance will be the 13,000, and we have a credit balance. So we can say this. We can say this at the end. At the end of the balance. So what is the closing balance? The closing balance is the 13,000. So as you can see, here is a 13,000. So 13,000 cash book debit balance, but as per bank passbook there is a credit balance. So what is the closing balance? We can say the closing balance is 13,000. Okay. So this is the main phenomena of working BRS. So this is actually the BRS. Okay. So this is the concept of BRS. Have you understand this phenomena? How this is working? Yes. So you have to understand a concept. I will give you a little hint that these entries will move opposite. So every debit transaction will be the credit here, and every credit transaction will be the recorded on the debit of a passbook or a bank statement. So what's the reason or logic behind this? So you have to understand the logic and the reason. I already gave you a shortcut to think about the movement, but the logic you should know about. Okay. So what is the main logic? How this is going on? So the reason is this. uh, Cash book actually the owner's own account. So if owner receiving cash, so cash will increase. Increasing cash means debit cash. Got it? Got my point? Increasing cash, so all the receipt mean here is the cash increasing. So increasing cash mean debit, and payment related payment mean that our cash is decreasing. Decreasing cash mean credit. That's why every cash receiving will be the debit and cash payment will be the credit. So this is the logic behind this cash book. And what's the logic behind this? So the bank or passbook is not maintained by the business, but it's maintained by the business bank account. That in case Dubai Islamic Bank, a third party, that is the business bank account. So DIB maintaining a bank account of ABC Limited. So if DIB credit our account, if DIB credit our account, it's mean our account is increasing. Our account is increasing. If DIB credit our account, credit mean we have deposit more money in our bank account. So that's why the liability of bank will increase if we credit or deposit some amount in our bank. Got it? And if we withdraw some amount from our bank, so the liability will decrease. So decreased liability mean the bank will debit our account. So this is the reason. So withdrawal money from bank will be debit and deposit money into the bank account is the credit. Have you got this point? So okay, any questions, student, at this point? So, okay, so you have to read this. I have approximately cover all the main aspects or basic aspects of BRS. In the next class, I will show you some technicalities involved in the bank account. So for that time, you have to read this. Okay, you have to read this para, read by yourself. Uh, okay, you can also read this para. So there is nothing worry about it. It's a very basic terms. Recording money withdraw from bank. So I have told you all in our this brief lecture. Okay. So this is the comprehensive as per exam, but you have to figure it out. You have to just read. The reason why cash and bank statement might not show identical entries. So you have to read this. Some time examiner ask a question from this area. So you must have to read this. Can you do this? Okay. In the next lecture, I will teach you some uh, terms which normally use in business bank account. So the next lecture will be start from here. Standing order, direct debit, bank charges. What's this? Okay. So today it's end up our session. If you have any question, you can ask. Yes. Any question? Okay. Okay, student. Take care of yourself. We will join in another class. Okay. Allah Hafiz.